Well, G20 finance ministers and central bank governors are gathering later this week in Italy in their first face-to-face meeting, at least since the pandemic began. And Brian, certainly no question, the global minimum tax going to be one of the key discussion points. And on that front, we're getting a little more clarity from the Treasury Department in terms of how they plan to approach this and what kind of buy-in they have. What have you heard?
Well, it's not just the Treasury, but all the finance ministers are trying to get their briefings ahead of those very critical G20 meetings, as you mentioned, at the end of this week. But at least from the Treasury side of things, we're hearing from senior Treasury officials that said that after the sign-off from the 130 countries in those OECD negotiations, they still need to set on, first of all, what is the exact number for a minimum tax. The 15% number has been floated out there, but we need to get a more concrete number on what that is. And then there's also just the minutia of how you would implement a global minimum tax. So one question would be, how do you tax, or where are the taxing rights for multinational corporations? Do you tax them based on not just where they have their business, but where their IP, for example, is housed? The senior Treasury official saying that that will require a higher level of multilateral coordination. They're referring to those negotiations as Pillar 1, and they're referring to the actual minimum corporate tax rate as Pillar 2 in these negotiations. Now, of course, one question is, after these global negotiations, how do you implement that here on the states side? And the U.S. saying that they will need to get sign-off from Congress. There's senior Treasury officials saying that Secretary of the Treasury Janet Yellen has been speaking with the heads of the House Ways and Means Committee and also the Senate Finance Committee with regards to possibly slipping that into those reconciliation discussions, which will be heating up in a few weeks. So it seems like the wheels are all moving. And for what it's worth, they hope to have all these final details at a global level ironed out by October.
Obviously, to your point, Brian, the number is still, the tax rate is still the big question mark. Obviously, the G7 countries, we had the 15% rate that was agreed to. I mean, what's the thinking on where Congress is likely to move? This has to be a global discussion, yes, but there seems to be some key hurdles in terms of getting the buy-in from lawmakers on setting a global minimum tax here.
Well, and this is exactly the issue when it comes to whether or not you can get the congressional support, because, yes, on one hand, it is a blue-controlled chamber in both sides of Capitol Hill, the Senate and also the House. But the question is, how would you try to engineer the legislative text where you would need either a simple majority, which would be somewhat easier, although not necessarily a shoo-in, in that narrowly Democratic-controlled Senate, versus a two-thirds majority, which could be interpreted to be necessary depending on how dramatic the change to the domestic tax code would be. That's a big reason why, yes, these international discussions are really important. That seems like maybe that was going to be the harder part of the negotiations. But for Treasury Secretary Janet Yellen and Joe Biden, the president, the real issue might not be getting sign-off from abroad, but getting sign-off on Capitol Hill, which would mean this could be in for a very interesting next few weeks in D.C.
Yeah, I mean, no question about that. It does feel like the domestic hurdle probably is even more significant. I mean, we are expecting, the G20 countries, those who are gathering in Italy, I mean, they've already signed off on this, but you've already had a number of lawmakers come out and say that we don't necessarily agree with that approach.